Ladies and gentlemen, welcome back once again to the only coast-to-coast radio show in the US of A that's all about the information economy. It's time for Inside Analysis. Yours truly, Eric Kavanaugh here. And folks, what a fascinating topic we have for today. I'm really excited about this show. Our guests I've known for a while now, very interesting characters doing amazing work on a blockchain ecosystem. So the exact topic is a token for your dreams. And I want to start off by talking about some data I just saw this morning, which blew my mind. Reuters has just reported that household wealth in the United States fell by a record $6.1 trillion in Q2 of this year. The NASDAQ is down 26%, the S&P 500 down 18%, and of course, Bitcoin fell a dramatic 57%. That's a collapse. That's a pretty big deal. The crypto world is reeling. I think we all know that. But we should remember that Bitcoin isn't really backed by anything. There's no alpha for Bitcoin. It's all pure speculation. So you really are risking it when you go down that path. And meanwhile, look at inflation. In January of 2021, it was 1.4%. Today, it's 8.3%. Right. So what's happening and what can we do about it? We're going to talk about that. So my colleagues today, we're going to talk to Sean Brem. He is the founder and president, or CEO, I should say, of CrowdPoint Technologies. And also Native Akhtar is a founding member as well. And these gentlemen know a tremendous amount about blockchain ecosystems, and they have built an amazing solution here. It's not just a technology. It is a true ecosystem. And I describe it as an ecosystem of transparent fintech exchanges that combines the best of several worlds. So these folks have fused together some time-tested financial instruments with what I'm calling a hyperscale blockchain that doubles as a real-time database. Well, what does that mean? It means you can enable things like dynamic optimization of purchasing power. That's pretty interesting. Immediate financial reconciliation of transactions. Think about all the interesting things happening in the fintech space today, where you can get your money earlier. It's kind of like the whole payday loan thing, right? That's been around for a long time. But now with services like Bill.com, for example, which most of our clients use, I'll get a notice from them that says, hey, your client has paid you. It's X amount of money, but you can have it right away if you want to pay a small 1% service fee. Right. So what they're doing is taking the risk. They know the money's coming in. They're like, okay, I'll give you the money a bit faster than normal if you go ahead and accept this 1% service fee. So that's fintech. But when you combine fintech and when you leverage technologies like artificial intelligence, compaction, all these different things, some very interesting things can happen. And then the foundation of the solution is the most important asset in the world, really. It's you and your identification, your ID. Think about how many people are trying to hack your ID these days. Think of all the big companies like Amazon and Facebook that are using data about you for their own gains, for their own ends. Well, these gentlemen have an egalitarian approach to let you benefit from that in a lot of very interesting and compelling ways. And with that, let me bring in Sean Brem and then Native next. Sean, tell us a bit about yourself and where things are going. And we've got an announcement we're going to make, folks, about an offering that's coming too. So Sean, welcome back to the show. Tell us what's going on.
Always great to be here, Eric. You know, the biggest thing about where we look at this is we've seen the same trends that you've seen in the market long before the most recent recessionary activity. What we saw is that the world really needed a trusted agent in an untrusted world. Too often, many of the retail markets, you know, people that are not accredited investors, you know, they get involved in Wall Street, but honestly, sometimes all the real accretive value has already been spent out. When they invest, they're basically backstopping people that got into the seed rounds.
Right.
And then on top of that, you know, today cybercrime is $15 trillion. And what's the goal of cybercrime? Well, that 16-year-old kid that Moldova is hacking in databases all the time, right? And then, you know, the global income is only about $4,000. Think about that. So that means someone making $37,000 or the mean family income in the United States at $47,000 is 20, 30x what other people are making. So we're all billionaires compared to everybody. When, you know, you hear a lot of conversations about the 1%er. If you're making $36,000 a year, you're a 1%er. But
in the world,
it doesn't seem like that. So, you know, Nidhi and I got together and said, you know, how do we take the tech experience I have in the background with his financial experience, and let's come up with a more egalitarian way. Let's go to market as a trusted agent in an untrusted world. Why can't we take all this data, get people to claim it, and once they claim it, give them an opportunity to make passive income on their data, Just let us kind of be your Jerry Maguire and help action it for you. And then we'll split a fee with you. So that gets deposited in a new kind of wallet. And then you can take what you make and buy more things at a discount, or you can invest in companies around you. And we were inspired by the original Buttonwood Agreement of 1792, which was the predecessor to all the public marketplaces. So that's a little bit about me and what we're trying to accomplish.
Yeah, and this is very interesting stuff. So Sean just referred to a couple different components of the storyline here, and this is very deep and it's very, very well thought out. Like I mentioned, it's not just one company, it's an ecosystem, and there are a lot of component parts that come in here. Data is a huge part of this equation. Think about how your data is being bought and sold, again, by the likes of Amazon, Facebook, all these other entities. It's everywhere. I mean, the data brokerage market is huge these days. What do you get out of it, consumer? What do you get out of it, average person on the street? What they tell you is, oh, we'll get you better targeted ads. Oh, great, thank you. That's what I wanted, better targeted ads for plowing into my personal life and understanding all these things about me. And Native, I heard you coming in there. Native Akhtar is also a big part of this whole ecosystem. Tell us about your background and what you saw and why you wanted to put this together and to make this dramatic offering that we're going to talk about today.
Eric, first off, thanks so much for having us on this show again. I remember a few months ago, or several months ago now, when we did our episode on the healthcare exchange. So it's nice to be invited back. Always a pleasure to be here. So my background is in investment banking. I spent a little over a decade in the mid-market space doing mergers and acquisitions for clinical services companies, right? And so in that career, I have seen deals of all sizes, and primarily worked in the corporate finance space. I've also ventured off into the asset management and crypto space, right? And what I saw was a clear need for some overlap with some beautiful benefits of blockchain, cryptocurrency, and some of the creativity of DeFi, with inefficiencies that still exist in the open finance or traditional finance world, right? And what we sought out to do with CrowdPoint was to ensure how the consumer can benefit by being the center point of these financial transactions, right? And so what we've done with our platform is built an infrastructure and ecosystem that centers around the human identity, right? Which think about it, when you're part of a transaction, you're the leverage point, you're the focal point, right? If you decide to go forward and consummate the transaction, then it goes forward, So you're essential in that part. And so let's say that your identity or your data is commoditized and leveraged to consummate a transaction. Should you not be rewarded for it? Mm-hmm. We think you should. Right. And so what we've done is built an ecosystem that builds commercial markets, i.e. distributed commerce. And we'll talk about that and our platform's offering in that space, as well as capital markets, right? And where these two commercial and capital markets intersect, that's we've built an ecosystem that provides real-time intelligence, real-time trading ability, real-time settlement, right? That enables one thing, which is liquidity, right? You talked, you referenced initially in your intro, getting paid faster, getting your money faster, right? And so you'll see in Web3, one of the great frontiers, I would think that Web3 is really going to bring into both the DeFi and OpenFi and traditional finance space is the notion of instant settlement, right? Mm-hmm. And we've designed some financial instruments that focus around this concept of instant settlement, yet still retaining essential elements like privacy and anonymity, right, as well as security. And so we'll dig into that as we describe more about our company.
Yeah, this is really good stuff. And when you talk about being able to do instant settlements, well, that's a big cost structure in the traditional world. It's also a big latency driver, right? So it takes longer to get your money. There are all kind of crazy things that can happen. And you see this in the fintech world, right? Fintech is a real challenge to the banking system, to traditional banking. And because these large banks are trying to figure out how they can leverage these technologies, but they have to integrate them into their processes. It's a difficult thing to do. They're highly regulated, obviously. But you also referenced data and being able to leverage the power of your data. So if you think about, folks, what a Facebook does with your data, well, they can aggregate large amounts of data and be able to identify patterns of purchasing, like, oh, people are wanting to purchase red sweaters or blue cars or whatever the case may be. Well, who benefits from that? Right now in traditional marketplaces, the people who benefit are the people who run these big companies. And what these
Yeah.
gentlemen are talking about is allowing you to get a piece of that action. So because this array of exchanges can capture all the information about the different transactions, what's happening at a significant scale, and see in real time, for example, that 50 of our members are trying to buy this particular widget because it's a healthcare exchange, maybe it's some particular kind of treatment protocol or something that a doctor has recommended, and like think masks, think protective gear for COVID, stuff like that. This system will dynamically ascertain that there is a surge in need for this and then automatically group you together to get a lower price. That's what you've talked about, right, Sean?
Mhm.
100%. I mean, let's just flip the table. So what you said is that, using your red sweater analogy, what they're able to say is, we know this many people want to buy a red sweater. And so what they do is they leverage that and they negotiate discounts to buy red sweaters with the vendors. So
Mhm.
essentially what they're doing is they're aggregating you and 2 million of your friends you don't know you have. And they're essentially creating a group purchase offer. Well,
Mhm.
why don't we flip it the other way around? Why don't we take 2 million of your friends and create a group purchasing organization that is dynamically assembled on a blockchain, distributed advertising, and then all of a sudden, and decentralized advertising, that's got some huge implications just in those words alone, right? Now all of a sudden that purchase power is put in your hands. And today, especially if you look at the American citizen today with the recession and where we're at, why not an extra, if we're sitting at 17%, type impact on the family income right now, then let's go ahead and offset that. And so I think this is the kind of thing that these kind of technologies are putting together. One of the things that's interesting is when Nidhi and I started this, we looked at the human identity really different. In fact, in my vision statement, remember, Nidhi, I talked about, hey, insurance only averages the average value of a human life with casualty insurance was $400 today, right? And it's scary, right? Because they insure per every 10,000. When you and I know that since the beginning of time, Eric, we've been the fundamental drivers of all commerce, whether it was barter or moving into stones and then moving into to precious stones that you couldn't break up, and then into silver and camels and everything. We've been in the middle of it. And
Right.
so why shouldn't we come up with a way that your data is working for you? I mean, there's a simple equation we follow here. The data plus value equals information, right? There's a big difference between data and information. And then information, when it's transferred properly, generates intelligence. In other words, I'm flying to Miami soon. And so I've got a plane ticket. That's just data. And I don't know if you're like me, I don't think that data is valuable, Nidhi, until we're in the car on the way to the airport.
That's right. There's always a change,
And
last
then all
minute
of a
change.
sudden, then it becomes information, right? And then then once we apply it to what flight number it is, and we look up at using a mathematical co-occurrences, or we're looking up at the monitor to figure out what data we have, that's intelligence, and we can make it actionable. So if data is the new oil, you want to figure out how to refine it and turn it in gasoline and power this economy. And the way you do that is letting people claim that data, stop the $15 trillion in losses, because it's really hard to steal data when it's in a distributed architecture and a decentralized architecture, and then create passive income for people. Well, it's certainly not the only answer, but it's certainly a step in the right direction, Eric.
Yeah, and what these gentlemen are talking about, folks, is the ability in this ecosystem to leverage your data and to leverage the data of other members. So when you aggregate data of all these participants, think about what Amazon can do in terms of price optimization. Think about what they can do. Think about what Google can do in terms of ad delivery, for example. Well, they're using all of our data, all the interactions that we've had with Google, with Facebook, with these other engines. They have captured that data and they are using it to build their predictive models. What these folks are doing with the CrowdPoint ecosystem is they're saying, look, that's your data. we shouldn't be the only ones to benefit from this. We're going to share this with you, and then you can leverage these analytic capabilities. And so they've got artificial intelligence baked into the system here, where it's kind of looking around and seeing what's happening and being able to dynamically provision opportunities for people such that you don't have to spend so much time on the cost of sale. For example, cost of sale goes way down, and the optimization of what comes your way is really driven by who you are and your decentralized ID. And I should point out one other interesting component before we go to break here for our first break. NFTs. We all hear about NFTs, non-fungible tokens. People are using it for artwork and some interesting things. But what these folks have figured out is they put your purchasing power onto the NFT. So now the NFT, which we know is tied to you, can float around on these exchanges and just kind of passively look for opportunities. And when they come around, it can alert you and you can see, hey, look at that. There's a, let's say you're again in manufacturing, let's say you're in the healthcare exchange, and you realize someone just unloaded a whole bunch of masks and you want some masks. You will get a very quick alert that this opportunity is taking place, and you can take advantage of that. And so what we're talking about is really allowing you as a member of this ecosystem to benefit from the kinds of analysis and analytics that the folks at Amazon are now using for themselves and for their key partners. You can benefit from that. And folks, this has all sorts of dynamics. And as Sean was mentioning too, if you become a member of this, then you're part of the group. It's almost like a co-op where you will also benefit when everyone else benefits. So they've really kind of thought through not just the economics of the system of building this, but the long view here is to put you in charge of your identification of your value, of your ID. And then every time you participate in this marketplace, it's adding more information, more intelligence about you, who you are. And that's going to be able to, again, bring you opportunities, not just highly targeted ads that Facebook is talking about. And trust me, they're not very highly targeted. Right? Because what do? You buy a pair of shoes and then you get shoe ads for the next 6 weeks. I already bought the shoes, right? I don't need new shoe ads, right? But anyway, folks, don't touch that dial. We'll be right back. You're listening to Inside Analysis. All right, folks, back here on Inside Analysis, your host here, Eric Kavanaugh, talking with Native Akhtar and Sean Brem of CrowdPoint Technologies, all about this new ecosystem and an offering. I mentioned an offering to you folks. Some very interesting things are going to be happening. There's going to be an SEC qualified offering. This instrument itself is registered with the SEC. So this is some good stuff. Takes a lot of time and effort to dot those I's and cross those T's, folks. Trust me. And maybe I'll throw it over to Native to talk about this, because you think about a lot of these financial markets. There's a perception that, oh, it's unfair and it's tilted towards this particular group and that. I happen to know there are so many really honorable people of great integrity working on Wall Street, and they're just trying to keep things rolling. It's an incredibly dynamic environment. Yes, there are some bad actors. That's true. But over time, I will say that it becomes so specialized and so, in a sense, ossified that it can be very difficult to kind of get into it at some sort of root level. And so it tends to lean towards the insiders. And what you folks are trying to do is change all that. And think about, folks, if there were a virtual stock market for small to mid-sized businesses. So that there have been some acts in the last few years that have opened the doors to different kinds of investments you can make. It's a much more open market these days. And what these gentlemen have thought about is setting up this array of fintech exchanges for every major segment of the economy and allow you, the individual, to invest in small companies, in larger companies, in other ways, in a system where you are a participant, where you're a part owner of that environment. So that's the sort of big vision. It's like a co-op that is a mini stock market for SMB, I guess is how I'd put it. But Native, what did I get wrong, or correct me if I missed something?
Eric, I think you described it spot on, actually. And so let me add some color from my perspective and some of the industry jargon, if you will. So first off, like our goal, with this egalitarian ecosystem that we've sought out to architect and construct, right, is to democratize finance, right, and democratize success and wealth, et cetera, right? But on the notion of, I referenced earlier that we're building capital markets, right? Well, in the private capital market space, I'm sure and a lot of the listeners might know that, look, for startup companies, getting that initial capital is quite difficult. right? It's really difficult, right? Especially if you don't have the network, you don't have the rich friends and family, that can seed you and support your dreams, right? And so the SEC did a pretty beautiful thing several years ago in adopting a regulation called the Jobs Act, right? And what the Jobs Act does is it allows private companies to solicit capital from unaccredited investors, or it lifts the general solicitation exemption and allows companies to solicit capital from any investor, right? There's a regulated framework to launch these offerings, and as you referenced, it seems quite cumbersome, and there's a lot of trust me, there are a lot of inefficiencies that our ecosystem is working on solving already, and we've solved a number of them. We're excited to offer that service to the public soon. Actually, we're already offering it to the public, but what we did is with our current offering is we wanted folks to participate and benefit from the upside of being in our ecosystem, right? And unlike a cryptocurrency or a token offering that would be done offshore and not compliant with U.S. regulation, we sought out to build an architecture for our financial instrument that follows U.S. rules, right? And one of the main reasons we did this is, look, if you follow the rules, then it creates a level playing field. Theoretically, it creates a level playing field for all players involved, right? And it goes to our notion, like the title of our white paper is "Open, Honest, Stable Markets." Right. And so this, our inspiration, our historical inspiration for the company references back to the Buttonwood agreement, when 24 merchants came together and said, let's figure out a way to create more efficient capital for our various businesses and our various industries, right? And so what we've done is use that same framework, and Sean describes that really well. And so I'll turn it to him in a short minute to describe the Buttonwood agreement and how we've utilized that to architect our ecosystem. But going back to our instrument, so we are issuing this based on what's called a Regulation CF offering. A Regulation CF stands for crowdfunding, right? And so this framework allows private companies, depending on which, if you have audited financials or unaudited financials, which we sought to get our financials audited. But if you have audited financials, you as a private company can raise up to $5 million from both accredited and unaccredited investors, even if you don't know them, right? And so that's it. You can generally solicit the public in an offering, right? And so we've worked with our securities counsel, our broker dealer, our escrow agent, transfer agent, you name it. We've followed every rule that the SEC has in our soon to be launched qualified offering. And so, I would encourage any listeners to stay tuned to our website or follow us on LinkedIn or Instagram or our Discord, for updates on when we're launching that. But it's I can say it's imminently to be launched.
Yeah.
So, Sean, do you want to describe the Buttonwood agreement and the inspiration for our capital markets practice?
Yeah, I got to tell you, I'm an unabashed patriot, Eric. As you know, I'm a former military officer, combat veteran, and I love this country. And I love it with all my heart, so much that me and my friends were willing to pay the price for it. And so I love American history. And so when people say to me, well, tell me why your blockchain's better. And I say, well, I can go technical route, or I can go the philosophical route. And the philosophical route is, it's like John J. Alexander Hamilton and James Madison created a technology. It was the spring of 1792, about May. Washington had just been sworn into a second term. And everybody's like, okay, we won the Revolutionary War. We need to grow this economy. Like we're kind of got a lot of debt, and Hamilton and Burr got in that big argument over the bank, and that didn't go too well. So we got to figure this out. So, well, for Hamilton, it didn't go too well, but so what they did is they got together, and 24 of them got together underneath the Buttonwood tree in New York City, and they said, look, what we're going to do is we're going to go out and get all these vendors and we're going to look at real-time commerce. And we're going to go ahead and take a look at what they're doing each day. And if the butcher needs more money, then we'll get the butcher more money. But let's figure out how to collectively pool what little we have, because we just came off a massive revolutionary war. And let's take what we collectively have, put it together, and we'll create an immutable, they even say this, we'll create an immutable and transparent trade. Sometimes you'll win, sometimes you lose, but in the end, we'll all win, because it's the whole concept of a high tide raises all ships. And they did it. And it really launched the free market economy that we know today. Now, as you said earlier, love people on Wall Street. We all have friends on Wall Street, but because it's, I love the word ossify, right? When you said ossify, ossification is definitely there. And so what happens is, having been an executive who's had some exits before, when I had that first exit, I got a chance to enjoy the concept of seed rounds because I was accredited. I got the chance to engage in investing in new startups. And then when those things sold, and eventually went through they went through their Series A, their Series B, Series C, and then they did an IPO. I got phenomenal returns, but 99% of Americans don't get that.
Right.
They don't get that. And so we wanted to change that. We wanted to take it back to the spirit of the butcher, the baker, and the shoemaker, and have the average American rekindle the American dream. And so what we've been real lucky in doing is we've taken this vision to a lot of private companies, 720, I think, Nitty, right? And they're all like, we're in. And then we went to people that have lots of data because they're doing online e-transactions, say, hey, give the data you've generated and give it back. Well, Sean, why would we do that? That's our market cap. Well, because when you get it back and you give it to the people, it's the law of giving, right? It's the more you give, the more you get. And so we've been really pleased to have hundreds of millions of data sets donated by trust funds and organizations that now we have the opportunity to go out to the average American, join us in the blockchain Buttonwood agreement.
Yeah. And what they're talking about, folks, is repatriating you with your data, right? So your data is all over the place, and you're talking about being able to allow people to claim their data. It's kind of like if you look at Google and you search up a business on Google, you'll have sometimes a listing will say, claim this business. And because it's your business, and you go, oh yeah, that's my business. That's kind of what you guys are talking about, right? Is doing that for personal data, what now Google is doing for business data. And, Google, as great as they are, they still haven't done a very good job with that stuff. Their times are always wrong for, whether the business is open or not. It's just amazing how stale some of that data gets kind of broken. But you're talking about repatriating personal data that is out there about me right now. Is that right, Sean?
100%. So you brought up Google and Amazon before. Let's kind of educate the customers. Being a former infantryman, we learned the concept of Crayola, crayon, simple, and circle time, right? So really Crayola, crayon, simple. When you look at the business model today, Amazon and Google and Facebook, they built phenomenal organizations, but they built what are called business ecosystems. Now, business ecosystem, unfortunately, over time, as we've seen, can become kind of ecosystems, right? They become kind of all about them. And the problem with the business ecosystem is the person, it's like the golden rule. Who has the gold makes the rules. And so what happens in a business ecosystem, this is really important, not because they're bad people, just because big companies have a way of getting really bureaucratic. And so what happens is these big companies have essentially created a digital platform. But as the owner of that digital platform in a business ecosystem, guess who extracts the most value? The owner of the digital platform. If it's a business ecosystem model, but if it's a blockchain ecosystem, guess who extracts the most value? The person that puts the most into it. And right now, the average person around this world has hundreds. I think we're looking at, Nitty, last time we checked, about 2,500 unique buying decisions they made.
Wow.
That's right.
2,500
on average. Sometimes more.
And so what we did is said, we have an idea. Nitty brought in his genius, of his past investment banking. He's all about indices. Like when you hear me talk, I'm the technical guy and the passion guy. Nitty's the straight banker, right? But so Nitty said, well, Sean, we got to create a financial instrument, an alpha around this. We got to establish a baseline, and we need to organize it so there are indices so we can look at total addressable markets. And we went, hey, Nitty, what if we take those 2,500 attributes and organize them by the S&P 500 at the sub-industry level? And he goes, wow. Now we're cooking with fire. What does that
Wow.
mean to the average consumer? Well, a lot of investors make investments based upon indexes or indices. Like if you want to invest in the automotive industry, you look at the indice. For example, during COVID, the energy sector did about 153% gain, but it didn't happen at the sector level with large companies. It happened in small sub industries where companies that were small and agile during COVID were beating the pants off the big guys. And so what would happen is if you participated at the top level, but if you participated at the more volatile sub industry level, you could have won big, real big. Well, what if you expose that to the average consumer on a daily basis and they're able to get involved? Because have you ever, let me make a real simple example. Have you ever done like a company party where they bring in the fake gambling tables and you get funny money and you gamble?
Yeah.
How many of us leave there with 40 grand? Right?
Oh, yeah.
Yeah, right. Because we're math
Yeah.
guys. So we're like, oh, yeah, I made 40 grand. Why? Because we were using OPM. We're using other people's money.
Oh, right.
So the vision here is,
OPM.
yeah, what is exciting here is once you start giving people their PM, their people's money on a passive income, they can use that to buy more stuff. Or what we're really telling them is get involved in the American experiment,
Yeah.
get involved in American greatness, invest. And that's where this takes off.
Well, and I want to point out one thing here for our audience, then we got to go to break, but we'll be right back, folks, is, I actually set up an Amazon account for a good friend of mine. He came up with a great pepper sauce that he wanted to get out there. And so I went through the whole process of setting up the back end of Amazon, which I can tell you is not the easiest thing in the world to do. It is not a very intuitive environment, but it's a bulletproof environment. And they've done a fantastic job of creating a bulletproof, really robust system. But guess what? They took like 50%. Right? So you'd have to charge $12 to make 6. And what these gentlemen are basically talking about is taking that equation, but then of the 6 that now Amazon is taking, they're going to split that, use half of it to build out the exchange and use the other half to put it into your personal wallet as a benefit of being part of the operation. So they're taking that margin, which Amazon is getting, and they're splitting it, giving you part of it into your wallet for later use. And the other rest is going to be used to fuel the ecosystem and build the systems. But folks, don't touch that. We'll be right back. You're listening to Inside Analysis. All right, folks, back here on Inside Analysis, yours truly, Eric Kavanaugh, talking about some fascinating concepts here, folks, and really reinventing the magic of the American dream is what these gentlemen are up to. It's what they've been focused on. And it's very cool stuff. We're talking to Native Akhtar and Sean Brem of CrowdPoint Technologies and their CrowdPoint ecosystem. And Native, in the break, you were talking about the indices and why they're important. And of course, we're talking about indices for markets, for manufacturing, for healthcare, for financial services. These are the kinds of things that investors look to figure out, okay, is it time to get in? Is it time to get out? How does it compare to all the other indices? What are the macro trends? All these things are what you want to be able to pull in, and you're enabled to do so in a very compelling way because of this blockchain. But talk a bit about the indices and alternative data, and how you're able to get it in real time.
Sure. No, thanks, Eric. So like Sean referenced in the last segment, the idea and concept of indices, right? And how our ecosystem publishes our own indices. Well, I want to tie in a little bit from my corporate finance background of why that alt data is so critical for enabling liquidity and movement in primary and secondary markets, right? So in the private capital market space, like one of the things that's really hard to do is evaluate your company in reference to other comparable companies, as well as the overall industry, right? And so it's hard to look at, like, when you think that you're a small p in like a really big universe or really big macroeconomic sub industry, it's hard to determine your value, right? And I learned this with many years ago as a restaurant operator, owner and operator with my brother, where we were quite savvy at looking at industry data to figure out where the trends were and to benchmark our performance against what norms were, right? And so we learned the benefit of alternative data from simply a management perspective at an early age. But it's because Well, perhaps one of the reasons is personal interest, but also, I learned these things in my undergrad at, in finance class, right? When you look at alpha and beta risk and how to measure your performance, as well as look at systemic risk and systemic performance, right? And so when we started looking at CrowdPoint and what value proposition we could provide to both consumers as well as investors, we started to look at, when you're an infrastructure company and you have the ability from a technology perspective to literally be at the I'm not the technical person, so I may butcher the explanation, Sean, but when you're at the, let's say, core level of a transaction and you're literally aggregating and servicing every bit of the data, both the technological side as well as the finance side, right? Because you own the data rails as well as the payment rails, right? What does that do? It gives you real-time primary access to intelligence, right? Well, what do? Like Sean said, when you have that data, you make it information and then you make it intelligence, right? And so what we've sought to do is publish, and this is something that our ecosystem is very much looking forward to do later this year, is publish indices as well as intelligence reports that reference performance of private companies as well as micropreneurs, right? As well as micropreneurs in with respect to their financial performance and economic performance on a sub-industry level. Right. And so that's what's key. Now, why does this matter to investors? Right. This matters to investors because if let's say you're looking at it, launching a direct public offering, or you as a private company are looking at launching a regulation A+ or regulation CF or a Reg D offering to raise capital for your business. Well, investors say, well, what's your performance versus other companies? How did you infer your valuation? Is it speculation or opinion, or is it data driven? Well, now you can be data driven, right? Because like you said, your alpha, your beta as well. And so that's what our distributed commerce practice provides as well. When you build your marketplaces in our ecosystem, right, we're helping you to garner your intelligence and benchmark against your peers as well as your overall industry, right? So you can look at your micro as well as your macro trends and figure out, are you behind or are you ahead of your, from where you should be? And theoretically, when investors have accurate, fast, reliable information, that translates to liquidity, right? Whether it's on a primary market or a secondary market, and a lot of times with private companies, one of the reasons you don't have a lot of movement in the secondary market side or the investor to investor trade versus a business to investor trade is the primary side, right? And have that accretive values because you don't have valuation done in real time. You also don't have the ability to trade securities from peer to peer, but that's what digital assets and tokenized securities allow. But that's a whole nother can of worms, Eric, that we could get into and have a lot of fun discussing.
Yeah, definitely.
I may have just invited myself to a second show with you. So.
I understand. It's very, very deep and very dense, but what you're doing is learning from the past of how we've done these things and all the lessons learned over the years and baking this into a new decentralized ecosystem that again solves a lot of those problems. And the latency issue is one, but also being able to target everything, because since it's on a blockchain, and this is not the original blockchain, these gentlemen actually built out a much different and much faster blockchain, right? That also acts as a real-time database. Well, folks, usually when you have to pull together lots of information to make a transaction, especially if it's a very big one, you got the whole clearinghouse process that comes after that. That can take time. It can take hours. It could take days. It could take weeks sometimes, depending upon the situation. If you can collapse that all down into a moment and have real-time visibility into other market dynamics, that opens up some really interesting opportunities for seeing what's happening and being able to capitalize things very, very quickly. And what happens then, like in supply chains, real quick, Sean, in supply chains, all kinds of good things happen because you don't waste time, you don't waste money, you get a much better deal on things, and it happens very quickly, right?
100%. Like if you take a look at, I was talking to a friend of mine at General Dynamics recently, and I was talking with her, and she's a fairly senior executive there. And I said, well, think about your F-16 program of record. I said, you're trying to upgrade it, you're trying to make it into, to more competitive to the 5th generation fighters, you've got to come up to some designs in your changes. And then you're looking at assembly manufacturers beneath you, and they're looking at assembly manufacturers beneath you. But at the end of the day, someone needs cobalt for the ion battery, right? Well, how do you shorten that queue time of every step of the way? So I'm a big fan of a guy, an Israeli by the name of Lehu Goldratt, that talked about theory of constraints. How do you remove all the little queue time that's in there? Like the English will say, when you're standing in a line, you're in a queue. Well, that's because you're waiting. So when you start removing lots of things, boy, costs sure start going down. Price gets passed on to the taxpayer, and the commercial marketplace and the consumer marketplaces all together. So the impacts on supply chain is just mind-boggling. Let me give you a practical application. So one of our partners brought us some data with about 65 million people through their federation by ailments. By ailments, I can know whether they're suffering from things as far off as erectile dysfunction to acne, right? Well, now all of a sudden, what you have the opportunity is to go to those people and say that those small businesses, not big businesses, small mid-cap businesses, and go, hey, you're in the acne, you've got an innovative new homeopathic acne solution, or you've got a homeopathic, you created, our favorite is we have a great little company that we're already working with. Shout out to Elder Power, right, Nitty? They've got this great little, their child could not take any kind of immune support. So they created a natural supplement out of elderberries, right? Well, now all of a sudden you can immediately go to them and say, here's your total addressable market, what we currently have in our exchange right now, let's target them. And that's what we're doing. We've been proving this out. So it's really exciting from supply. And what that means is now her supply chain, all the way back to the pickers of, we all pick the mulberry bush in the morning, right? Instead, it's the elderberry bush in the morning. You have that visibility all the time.
And visibility across these highly complex supply chains. First of all, it's very difficult to achieve in a traditional environment because they're disjointed systems, right? Because you have to rely on phone calls, and maybe there's some API integration or something, but it's not built natively to embrace cross-platform data sharing, right? And to do so in a very short time period, again, it takes so much of the risk out of decision-making in business to know what is the addressable market, what are the going price points, what are other people paying. It gets us all closer to reality and to knowing what's really happening all around us and where we want to go, right, Native?
100%, right? Look, with this concept, you can't measure your success without a measuring stick, right? And that's what we're really aiming to solve here.
Yeah, you can't measure your success without a measuring stick. Well, folks have been talking to Native Akhtar and Sean Brem of CrowdPoint Technologies. Quick podcast bonus segment is coming up next. You can always reach me, info@insideanalysis.com. You'll be hearing a lot more from these folks in the near future, I promise. Big offering coming. Watch for it, look for it, get into the ground floor, and you can be a part of something really big, the next generation Buttonwood agreement. You're listening to Inside Analysis. All right, folks, back here on Inside Analysis, time for the podcast bonus segment. We've been talking to Native Akhtar and Sean Brem of CrowdPoint Technologies. Big offering coming out down the road, folks. They just did a round. It was very successful. So this next round is going to be for anyone who wants to get involved. And we want to talk about the underpinning. So this Vogon blockchain that you've developed has all sorts of really interesting characteristics. I'm calling it hyperscale because how quickly it can scale out, whether it's for compute or storage, if I'm remembering this correctly. But tell us about the Vogon blockchain and how it can enable use of all this alternative data.
Yeah, the great way to look at this, and you and I were on a podcast in the past in which there was some guy from the UK on it, and he talked about blockchains just being really slow databases.
Yeah, that's
right. And that's wrong. They shouldn't be, because here's what's really embarrassing. If you look at a ledger, it's less data than the average teenager puts in a text, but it takes the country of Denmark to process, right? That's what's going on right now, Mr. Inefficiency, right? And then you've got Ethereum doing their merge right now, and all they're doing is creating middleware, and all the hackers are going, yes, please. That middleware is awesome to hack, right? So so what do we do? Well, the first thing we did is we said, well, what if we built a database that could be both public and private, but could actually not be a really slow database, right? What if we could get it like to move at lightning speed? What if we could make it so fast we'd make Larry Ellison pay attention from his home in Hawaii, right? That would be super interesting. And so that's what we did. And what we did is we built a decentralized cloud that actually behaves like a blockchain. So, you know, a lot of you that are techies out there, you know the value of deterministic databases. Well, when you combine it with the concept of blockchain, you get deterministic concurrency, which means you can run stuff super fast. So what we did is, I don't have a cube on me, so I'm going to kind of fake it with my little cigar thing here.
Okay.
Imagine that's a cube. Okay. That's a block. Well, what if the bottom of that block was a polyglot? Now, polyglot for you Latin majors and language experts out there, that means universal language. So what if at the base of this, there was a universal language? What do we mean by that? Well, bring your Python, bring your C++, bring your C#, bring your Spark, bring your Kafka, bring any programming language you want, bring it on over. And then what if you split it in half here? And this side said, I'm going to build a container, kind of like you see with Docker and Kubernetes, where you can just drop your any language you want into this container. And the whole job of that part of the block is to go, hey, I need more compute capacity to run the application. But as we know, applications generate data. So what if the other side of the block over here is where you stored your data? And so as you're running applications, it automatically splits like cellular mitosis and creates another block so that you get more compute power and more storage power. And the benefit to that is it keeps scaling and scaling and scaling, but it works like a relational database, which means you're not just doing a ledger that says Sally bought from Susie and you spent $47 to buy a pizza on Ethereum because you used the country of Denmark's energy requirements for the path, right? What if it was minuscule, hyper fast? And here's the cool thing, just like the original Buttonwood agreement, it was transparent and immutable. What does that mean? You can't go in there like we're hearing now with all these whistleblowers and change the database.
Right.
Can't do it. Now you can update the database and say, well, this was a mistake and here's why it was a mistake. Great, that's transparency.
That's
but
right.
What if you now can give every small business and every person, the cool thing about this is now every person owns their own portion of their database and that's their data. And now all of a sudden they're going out and saying, here's how I want to use it, making passive income. Then they're going to bump into another company that wants them to invest or buy from them. And they're giving their rights for that. And they're taking their mutual value and combining that in a public, private, decentralized cloud that splits like a blockchain.
Wow. And with that, folks, we're going to bid you farewell and we're going to see these guys again very soon. Watch out for the offering, Sean Brem and Native Akhtar of CrowdPoint Technologies. Congratulations, gentlemen. I love the transparency. We just saw Twitter, Facebook. These guys are not transparent. I talked to a guy today who knows how they built the Twitter database, and he goes, yeah, I'm really not surprised that it's that wide open. And that this Madge guy testified that any developer can get into any account at Twitter and change things. I think they're trying to set themselves up to say, yeah, we don't know who deleted Trump's account. I think that's insane. And these guys are solving that problem and many more. We'll talk to you next time. You've been listening to
Come check us out.
Thanks, Eric.
Thank
Good
you,
night, everyone.
gentlemen.
Thank you.